Get the latest Zacks research, analysis, and rankings on exchange-traded funds in Exploring ETFs. We're going to find out more now about energy ETFs with our ETF strategist Eric Dutram, who joins me from Zacks.com. So there has been some volatility in that space as well among energy ETFs lately. What kind of energy ETFs are we talking about here?
Well, specifically we're going to talk about natural gas and oil in today's little presentation. Oil has obviously been very beaten down thanks to the big slide. We've seen oil prices down by their 52-week lows.
Right.
But natural gas has actually been a strong performer as of late. And some could argue it's the best energy commodity ETF right now. As you and I know here living in Chicago, it's been a very cold winter already, not even at Thanksgiving yet.
It's not even winter yet.
Exactly. So, you know, that's been a real catalyst for natural gas prices here. And it's kind of bucked the trend compared to the other energy ETFs that remain weak thanks to this big commodity slide with the stronger dollar and whatnot. Oil funds in general have been down about 8% in the past month, but natural gas has actually been a pretty strong performer. UNG, which is the top fund we're going to be talking about here, it's up close to 10% in the time frame. Once again, that colder weather we've seen has been a real catalyst for this big move higher.
Now you've got a comparison chart of all of this, right?
That's right. We're going to look at UNG, which is the black line right here, and then DBE is a broad energy ETF, and then USO is just West Texas Intermediate Crude Oil Futures. So we can see USO is down almost, you know, it's been a pretty bad performer. UNG's really soared compared to these other ones. This cold weather issue has really been the main factor. And I mean, if this really continues here, we could see UNG continue to outpace its rivals in the energy space.
Okay, top ETFs in the space, UNG and UNL.
That's right. UNG and UNL are the most popular in the segment. The main difference here is UNG holds just the front month futures contracts. UNL spreads out its exposure across the next 12 contracts. UNL is up about 3.9%. UNG, as we've said, is up about 10%, and this is thanks to that difference in the futures contracts. The front month futures have been performing much better than the later months, and that's why we're seeing this kind of very different performance between the two. But either way, both will benefit from more cold weather or if we see a big supply reduction here in the near term.
What about those investors who like to leverage? There's a few funds out there for them.
Definitely. The leveraged natural gas space is a very volatile space, to say the least. We've seen huge movement here, as you might expect, given the short moves here in the UNG and whatnot. If we look at the positive performers, UGAZ is a 3X fund. It's up almost 28% in the past month. Boyle, they got some great tickers here, is up 20% in the past month, and that's a 2X fund. And on the negative side, we got DGAZ down about 33% in the time frame, and then KOLD, cold, down 23% in the past month. So some huge moves if investors really are, you know, more of a traders actually are thinking about the natural gas space. These could be ones to look at in case you want to either bet the trend will continue or that we'll see a big reversal here.
Those tickers kill me every time I hear them. All right, what about those people who don't like commodities but want to turn to stocks?
Well, you know, that might be a little problematic this time around actually, just because there's one natural gas ETF out there. It's the First Trust Natural Gas Fund. FCG is the symbol here. Focuses on exploration and production. And as you might guess, based on all the weakness we've seen in the oil and gas space, it's been a pretty bad performer over the past month, despite its focus on some fundamental metrics, trying to find the best stocks in the space. It's been flat over the time frame, so it's definitely outperformed oil. You know, the oil ETFs that we were talking about earlier, but it's been severely lagging natural gas. So this might be a segment where you want to focus on the commodity and not the equity product, at least in the near term if we see some of these trends continue and the broader energy equity space remains weak.
All right. Own either of these funds you talked about?
I do not.
All right. Check out more information on ETFs in the ETF section of Zacks.com. If you're not there already watching this video, you can link to them right off the homepage, so get on over. With Eric, I'm Terry Ruffalo.